Today's guest is Jeff Sailing, founder and executive director of StartUpNV. Jeff has spent years helping entrepreneurs turn ideas into scalable businesses by connecting founders with mentorship, capital, and real-world execution strategies. He is also a professor of high-tech entrepreneurship and a key force behind Nevada's growing startup ecosystem. Welcome, Jeff.
Thanks, Ed. Happy to be here. Good morning.
So we'll get right into it, Jeff. What originally pulled you into the startup world?
Well, I was on the founder side before I was doing what I was doing. So, that was my introduction to startups, came in the early 1990s. And then that first one that we did was pretty exciting, but ultimately it didn't go well. I thought, okay, well, maybe this isn't for me. Went to work for what was then called Anderson Consulting, now called Accenture, for a few years. And I discovered that really I'm not a big company guy. So I went right back into the startup world after that. Again, on the company side, on the founder side, for a whole bunch of years before I shifted over to the helping of entrepreneurs and the funding of company side, which happened in 2017.
And to expand on that, what do you mean by helping entrepreneurs?
Well, we have two parts of the work that I do now. On the nonprofit side, StartUpNV, its mission is education and economic development. So that's the part where new investors learn how to be angel investors. So that's one side of the house. The other side of the house is the actual venture capital funds, which, those can't be nonprofit. People are actually investing money. So everybody expects to make a return on that. And we started that part of our journey in 2021.
Oh, excellent. Excellent. So what lessons have shaped you going through this progression with your leadership style?
Well, for us here in Nevada, and particularly in Las Vegas, the economy is built on tourism, gaming, and some mining as well out in the rural parts of the state. And every time the economy slows down, it's like getting punched in the solar plexus, right? People stop traveling, people stop, coming out and having fun in Las Vegas. And that could be pretty, chilling, depressing, living in communities where things slow down so radically. Now, when the times are good, it's great. But we thought that we ought to be able to do more than just that. We love that big, beautiful 3-mile strip and all of the people, the 40 to 50 million people that come and visit us every year. But to even things out, it was my idea, having been in the startup ecosystem in Silicon Valley, Austin, Texas, and Seattle, that, we could use a little bit of that in our ecosystem here in Nevada. So that's what really inspired us to do the work here, was to, help the founders understand what it took, what was happening in those other places that I had lived and had a professional career that could be helpful to, our economy and our ecosystem here in Nevada, whether it's Las Vegas, which is where most of the people in Nevada live, or Reno up in the northern part of the state next to Lake Tahoe.
So that's really what, with your failing when you first got into being a founder to now, that's really seems like there was a lot of motivation to help others not go through some of the same pain points.
Well, yeah, there was that, but it wasn't, the first one didn't work. It was exciting, invigorating.
Yes.
Some might say, but there were 3 that actually went to IPO, and most of the work that I did beyond the initial startup, which was more focused on consumers, the rest of them were focused on sort of really geeky back office, boring stuff that really large enterprise companies have to do. But these are companies you never would have heard of. One was focused on helping companies with large call centers in the late 1990s to, do a good job when people called in. Just why it drives me a little bit crazy when, you call into a customer service somewhere and they ask you a lot of questions about who you are and a bunch of identifying information, because they know from the phone number you're dialing in. I know because we deploy the technology. They know exactly who you are. They know exactly, they should be able to look up all that stuff before they even pick up the phone. Anyway, we all go through it.
Yes, we do.
100 different buttons, shouting at the phone, customer service. Another one was our technology helped to pay the incentive compensation for very, very, very large and complicated sales forces. You just think of the insurance industry, right? You have your insurance companies, you have all your insurance brokers.
Okay.
You have them selling insurance. So that all of those people get paid, on commission, on variable compensation, depending on how successful they are. And when you're paying 5 or 10 people, hey, yeah, you can do it on a spreadsheet. But when you're paying 10,000 or 100,000 people, gets more complicated. So another sort of boring back office, really specialized piece of software that we deployed all over the world at some of the largest companies on the planet. The third one was helping the CIOs of really large enterprise companies treat their IT business as if it was a service business, like a separate service company on its own, servicing the needs of those very large companies, because many of those CIOs would get into trouble, because the CIOs of companies they never do the main thing that the company does, whether they're a manufacturing company, whether they're a bank, or whether they're selling technology. That CIO is essentially a service organization to the rest of the organization. So when things get tight for those companies, they ask the IT team to cut back, and that CIO would cut back on people because that's their largest expense. And then service wouldn't be so good and CIO would get fired. So we gave them a tool to really help manage that business that they had with the rest of their company, so that when the company did have to cut back on their IT expense, the executives together could make sense and make good decisions about, okay, so what does get cut back? Should we be outsourcing some of this stuff? Can we protect our data in doing those things? And it was really an effective tool for the CIOs to manage their spend and their team and the service that they provide to the rest of their usually very, very large worldwide companies. And all three of those companies, sold a lot of software, eventually went public. Eventually, all three of them got bought by bigger companies after they had gone public. So there's lessons to be learned in building those companies from an idea, from the first 2, 3, 5 deployments, all the way to a point where you go public and then operate as a public company for a while, and then eventually get bought by a much bigger company. But those were all great, successful exits. Nothing sexy, no big fancy companies that you ever would have heard of. Yeah. But those lessons are the ones that I'm trying now to bring to the folks who are at the very beginning of that journey. I've been through it. A lot of the colleagues I have here working with me have been through it. So you need those lessons. You need that sort of mentorship, that help along the way. And then, also the venture capital that's required that gets you started. We're not a giant venture capital fund that writes, mid 8-figure or 9-figure checks into companies. We're at the very, very start. We're writing 6-figure and low 7-figure checks to help these companies get started. At least the ones that we think actually have some legs, that might not be the sexiest thing you've ever heard of. Yeah. But they're going to do a good job. They're going to do a good job serving businesses and enterprises out there in the world, whether those businesses and enterprises are located in our state or most of them are located elsewhere.
So you're really guiding them through that whole process, so they're not making the mistakes like others, and you have, and
yeah, so I certainly have,
and we all have, and that really can save a lot of pain and really get them through that point where you could go either way, but into the success area. And like you said, boring is usually better, in a lot of ways. Yeah. Not, it's not fancy. It's not that, but that's where you could gain a lot of your success.
Well, the founders and their employees and the customers of those companies don't think it's boring. I mean, it's maybe detailed. It may be very technical, but it's exciting for the niche.
Yes.
The thing that they're servicing. It's needed. Otherwise, companies wouldn't spend millions of dollars on the solutions that, our founders, bring to the market.
Is there a particular niche that you guys are helping more than others, are you finding, or is it kind of spread across the board?
It's not a specific, really narrow niche. I have partners in our venture capital funds, and we all focus on different things. We tend to like companies like the ones I described that I did, right? They're sort of technical solutions, a lot of software, but not entirely software. It could be a combination of hardware and software that are servicing other businesses or large enterprise customers. Those are the ones that I tend to like. I understand them the best because that's what I did when I was doing it. If you look at, venture capital as a whole, you'll hear the phrase B2B SaaS, business to business software as a service, or enterprise SaaS. Those tend to be pretty good. If you can execute well, they tend to be pretty good investments. Now, AI, it's dominating all of that now. It's not just software in the same sense that I did it back in the 90s or even 5 or 6 years ago. It's more AI native solutions at this point, but it's still that same set of really large companies, medium-sized companies that we tend to like versus, a consumer good. Maybe you've got the next gee whiz thing that you've invented that that millions and millions of consumers are going to buy from you, and perhaps buy through retail that you made. We certainly see a lot of those companies, and we certainly see a lot of, because we're in Las Vegas and in Reno and largely in Nevada, we see a lot of gaming startups. And while those are exciting, our particular offering is, and we can help the founders with basic information and basic coaching on those things, but we don't have the deep expertise in consumer packaged goods or pharmaceuticals or deep science kinds of investments, which are awesome, but they're just not, that's not the flavor that we like. Doesn't mean they're not good. Doesn't mean that we won't try them once in a while, especially if we have a new member of our team that's got that kind of background.
Yeah.
But we tend to like those technology first. Like I said, whether it's software or combination of software and hardware, it's a solution that's going to help generally a very large business or at least a medium-sized business. But when you sell to them, they're going to be your customer for many years.
Yes.
Your solution gets baked into their workflow, and they'll spend, I don't know, $5,000 to a couple $100,000 a month with you, depending on what it is that you're doing.
Well, where do you think the founders of these companies, where are they misunderstanding sometimes about how to scale before you come in?
Well, I'm not sure that they're misunderstanding it. They've just maybe never done it before, and they need help guiding around, some of the obstacles that are going to be in their way. Sometimes it's thinking through your own internal workflows about what kind of technology you need to deploy so that your service can scale. What kind of financial backing do you need? How much actual venture capital do you need? Taking on not enough is going to put you in difficulty very quickly. Taking on too much is usually also not a good way to go. You want to have just the right amount, so you don't dilute yourself too much by selling too much of your company at the start when you don't really need to. So it's a question of, raising enough capital, looking at the technology solution that you're deploying, making sure that it works for what the customers are doing, staying in constant touch with them, constantly monitoring their use of your solution so that if they get into trouble, you can fix it. If they stop using it for some reason, maybe your sponsor that bought from you, that was enthusiastic, moved on to another job, and the person that took over isn't as enthusiastic about the solution as the original sponsor was. Staying in touch with all of those things and just making sure that whatever it is that you put out there in the world continues to work, that it's funded properly, and that you've got the right discipline to grow it, whether that's financial discipline, technical discipline, customer service discipline, whatever it is that's required to make it grow.
So hopping on that, what do you think the biggest pain point founders today face?
Well, I think if you asked most founders, they would say, I just need the capital. I just wish there would be some venture capitalist that would give me the money, and then I can go out and do the work. And, money is certainly a key asset, but the thing that ultimately turns out to be just as important, if not more important, is the people that are in your company and the technology that you've produced, the solution that you've produced. If those things aren't right, no amount of money in the world is going to help you. It might delay the inevitable a little bit longer, but you still need to execute. And that's what separates the ones who are successful from the ones who ultimately don't work is an ability to execute. And it's something that we look at very critically when we're looking at a potential investment is, okay, this seems like a good idea. The founder may have some real deep expertise in a certain area. So they've identified a pain point. It looks like that area is ready for some disruption. There's a lot of pain there for many companies. And that's all well and good. The market's big, so it can grow for quite a while. But can that founder or founding team, have they shown the ability to actually work through problems and grow something else and execute? Are they going to eat glass, as we say, for years to make this thing work? Because it's very rare that somebody starts something and it just takes off on its own. There's a whole lot of problems that you have to deal with along the way.
Right.
Some of them are technical problems, some of them are financial problems, some of them are people problems, some of them are marketing problems because you haven't quite figured out how to say what it is that you do in a way that people can understand it and lean in and ask more questions and eventually buy it. So, all of those things are an important part, but beyond the money, you have to be able to execute. And like I said, no amount of money in the world is going to help you do that if you aren't able to do it, or at least get help to get that done.
So how has AI come in and helped a lot of these companies with and yourself with getting through that pain point?
Well, for us, as investors, it helps us. It's like having like a PhD assistant, research assistant to research market sizes, to research, is this really paying, to actually look at the technical solutions and see whether or not they're real, to see whether or not it's something that can be recreated easily by somebody else. So you're sort of testing whether even if there doesn't look to be competition right now, whether a competitor could enter the market very easily. In terms of the solutions that our founders are creating, most of the ones that we're seeing now are what I call AI native, right? They may be a solution. There's a company that we invested in that does the same thing I did when I was talking about that solution where you help to pay really large sales forces. We at the time that we did it back in 2007 through 2012, our company was the OG. We were the standard. We were the one that went public and eventually got bought. But by today's standards, what we created is very brittle. You practically need engineers to continue to run it. It's expensive compared to having an AI first solution that's created today. So the ones we invested in, one that would have been a direct competitor of mine back in the day, but man, the deployments go so much better. The ease of the solution to the actual users of it is such a more pleasant experience. When I was doing due diligence on the company that we eventually invested in, we talked to one of the customers and administrator of the system. She practically broke down in tears saying, I've been doing this for 10 years. And this is the first time I felt like I could actually do my job at the end of the quarter. And I wasn't thinking I was going to get fired because I wasn't able to get people's commissions out to them in time in a way that made sense to them and in a way that she knew that she was paying people accurately. And I knew she was talking about some of the stuff that I did, 20 years ago. It was the best that we could do at that time, but it was hard to work. You would get to the end and you had some exceptions and you weren't sure whether you were paying people right. All your bosses were on your back about getting this thing done so everybody can be paid. And so it's a stressful situation for the people who actually have to administer these systems. And the AI first solutions just make it so much easier for somebody who's, technical, but they're not an engineer. And like I said, and I've seen that same idea play itself out in many other areas that I understand the basics of, but I may have less, really deep knowledge of, like I did in this incentive topic.
And that you actually went into my next question was, how is AI changing the startups? And I would also add, and I would ask you, is this AI leveling the playing field in some way for maybe a company that didn't have it as much maybe going for them, or all the technology and everything that maybe a larger company has?
Well, it makes it easier to get started and less expensive to get started. You still have to be able to execute, but you can prototype. You can get something out in the market to see whether or not you're building something that people want or not. You still have to have that deep expertise in whatever your niche area of service is going to be, or you could build something that's just not that useful. It'd be easier to build than it was 10, 20 years ago. But it's still got to be useful in a way that people who use it every day are going through. You also have to make sure that you're not building something that one of the big labs is just going to make a feature in their product, right? That the OpenAI or Claude or
right.
Grok or somebody else is just going to, oh, hey, anybody can do this. The idea that these really, really large corporations are going to set their IT teams on building solutions that would replace these software products is, well, having served those companies for many, many decades, or for at least several decades, it's crazy to think that these big companies would want to do that. They want somebody to bring them a solution that they can implement easily and use, rather than them having to think through the needs themselves. There are some exceptions to that, but for the most part, the big companies they want somebody to bring a solution that just plugs in and does whatever it is. Whether you're trying to figure out how to run your IT department better, or trying to stand up a new solution in a customer contact center, which used to be a lot of phone calls. Now it's a lot of online chat and everything else.
Right.
Whether you're trying to get people paid, or whether you're trying to do one of the other 30 things in the companies we've invested in over the years, which go well beyond the things that I personally did. But they all have that same theme, delivering some solution to a really large set of companies that help them to run their business. So AI makes it easier to get started. It generally makes it easier to operate, but you as the founder and founding team in the company have to be able to execute whatever it is that you're doing for those companies. You better have some expertise there. You better be able to grow your own company to support the folks who you're selling to.
So what would an immediate use of AI would you recommend if you're starting a company now with the use of AI? How would you use it immediately if you're starting a company? What would you say?
Well, before I built a thing, even wrote the first line of code, research. Make sure that whatever it is that you've got an idea about is actually something that people want. Is the market large enough? Is the pain around whatever area it is that you're building in large enough that people are going to change their behavior? Because if you're, there's a couple of analogies that get used in our world. One is, do you have a bleeding artery or a paper cut? You don't want to be working on paper cuts, right? You want to be working on big pain points. Are you creating a painkiller or a vitamin, right? You want to make sure you're creating an actual painkiller and not just something that's, it'd be nice to have. It'd be nice if that piece of our workflow internally worked a little bit better, but you want to make something that's going to solve a big pain point and that there's enough of it that you can scale this company to, hundreds of millions of dollars or more in sales. And if you expect to attract venture investing, that's what you have to do. If you're, we also help in our nonprofit, we help a lot of local businesses too. These businesses may not be scaling to hundreds of millions of dollars in sales. You still have to follow, a great amount of discipline. You still have to make sure that your local market is big enough to support, you, your family, the employees that you have, but you're not going to attract venture capital for those businesses.
Right.
You've got, a business that transports pets around your area to their various veterinary clinics or whatever. It's like, hey, cool business. You've got a service business of some kind, a legal practice, marketing, consultancy, something like that. Fantastic. Do a great job. Service the heck out of your customers. Probably not a venture scalable business. Doesn't mean it's bad. Those are 85, 90% of the businesses that are out. But, decide, what it is that you're going to do. Make sure that there's a big enough market for it for whatever your goals and objectives are. And then go about, funding and growing that business in the most appropriate way for whatever it is that you're doing. If it's venture scalable, make sure you're understanding all of that. If it's more of a local business, great. Nothing wrong with it. Just make sure you're going about it in a way that it's supporting that style of business in the right way.
Excellent. Your company, StartUpNV, where do you guys see yourself going in the next 6 months, year, 5 years, as far as your growth?
Well, our dream from the start was we knew that we would have to probably raise grant money for the nonprofit to get going, whether that was, economic development type grants or grants from big corporations or local philanthropic people that were interested in growing our startup ecosystem. And that's how we've largely grown the business today. But right from the start, we knew that we'd have to create venture capital or find it in our market to get going. And, the first 4 or 5 years, all we were doing was teaching. From 2017 to 2021, we were just teaching. We were showing people, using the experience that my co-founders and I had, and having done it before, to teach people how to do it. And it was frustrating getting somebody that had the ability to execute. It had seemingly an idea that was disruptive, that could scale, but there was no venture capital in our market. We had one angel group in Lake Tahoe in the entire state.
Oh, wow.
And watching these guys struggle to try to raise capital for the businesses was difficult to watch. So, in 2021, we started on the venture capital side by raising a little fund, and that's grown over time to other funds and a whole program that we call AngelNV that trains people how to become angel investors, on how to, we don't want them to make one investment and then just have it be a bad one and stop.
Right.
Because they picked the wrong company or they chose the wrong founders or they didn't investigate it fully to make sure that they stood at least a decent chance of getting their money back. Because that's what's going to keep them coming back and funding more companies. So over time, as we've funded these businesses from the venture capital side of our businesses, we've asked the founders to donate a little piece of the general ask is 1%. Sometimes we get 1%. Sometimes we get a little less than that, depending on how mature as the business gets more mature, it's a little harder for them to give a full 1%, but they give something. And those 1% that we've been accumulating since since 2017, 2018. A few of them are now starting to become worth some money, right? We've had 2 companies IPO, and we have another couple of companies that have gone on and raised multiple rounds of capital beyond the initial capital that we put into them, more valuable now than what we invested in them. And our hope is that, it won't happen this year, it might happen 2 or 3 years from now, that some of those companies will become big enough and valuable enough that those little 1% or 0.5% or the tens of thousands of shares that we have actually become worth millions of dollars. And it'll essentially fund our operations, I don't know, indefinitely, but at least for several years.
Right.
Without having to go back and ask for grant money, which, in the last couple of years has become almost unavailable. And so that's the idea, is eventually go from being a nonprofit that's so dependent on the generosity of grants and others to one that can stand on its own, help people based on the help that we've given out and sort of getting that payback for it.
Yeah.
And, the real dream is to eventually maybe be a granting organization of our own, because we've accumulated, so much, capital along the way that we can now not only invest, but actually grant out to other entrepreneurial, economic development, education types organizations to do other great work in the community beyond the work that we focused on in growing a startup ecosystem.
And so on that, where can people get in touch with you if they're interested in what you do, and whether it be for grant money or venture capital it is for different ventures?
Well, easiest way to get hold of me is just to email me. So I don't mind, people can email me at jeff@startupnv.org, jeff@startupnv.org. We have a couple of different websites. The main one is startupnv.org, but our venture capital funds actually have their own websites. Our angel program is angelnv.com. We have a pre-seed fund we call FundNV. You're going to get the theme with all the MVs after this. So we have angelnv.com, which is our teaching investors program, where everybody invests a little bit of money, and then together we find companies and invest. In the process of finding those companies, doing due diligence, and eventually investing in them, teaches angels how to do that for small stakes. We're talking like $5,000 kind of investment. We're not talking, millions of dollars. I mean, for the investors, they each put $5,000 in, but as a group, it creates hundreds of thousands. So that's one, Angel NV. The other one's FundNV, pre-seed fund, fundnv.com. You make 6-figure type investments in early stage companies that have a little bit of sales. They've developed a product. They've got first few customers. Probably don't have what you would call product market fit, but they're trying to discover it. And then as they get a little further along, we have a seed stage fund called 1864, 1864.fund. 1864 is the year Nevada became a state. That's the name.
Oh, okay.
And then we have a traditional angel program called the Sierra Angel. You can go online and find out more about that at sierraangels.com. Like I said, I got emails at each of those things, but the easiest thing to do is just email me at jeff@startupnv.com, or you can reach out to me on LinkedIn. I'm easy enough to find out there. Although I got to admit, I try to stay up with all of the messaging and everything else that goes on LinkedIn. Some weeks are better than others.
Yes.
But those are all ways
like
you can
us
get
all.
them. Yes.
Is there a specific qualification to become an angel investor?
Yeah, there is. There's a standard. It's regulated by the SEC. It's called an accredited investor on a national basis. And to be an accredited investor, you have to have more than $1 million net worth outside of your principal residence, or you have to earn $200,000 a year or more on a W-2 as an employee, or $300,000 or more a year as a couple. That makes you an accredited investor. In Nevada, we created our own intrastate standard a couple of years ago called the Nevada Certified Investor. So our incomes and property values in Nevada are not as high as they are on the coastal parts of the United States. So as a percentage of population, you're in the East Coast, the Northeast, probably 15-20% of the population meets that standard. You get out to California, the Bay Area, again, you're talking 15-20% of the population are eligible as an accredited investor. In Nevada, it's about 4%. So we created our own standard, a Nevada Certified Investor, that says if you make more than $100,000 a year, or you're making more than the median wage, the median wage is, I think, right now in the 70s. So the 100 will be the standard for probably a couple of years anyway. And you're not investing more than 10% of your net worth and you're investing in a Nevada company because it has to be intrastate in order for our own regulations to apply. Then you can invest in the state of Nevada into startups here. So we created our own standard. Now, there's a bill going through Congress right now. I think it's passed the House, hasn't gone to the Senate yet, that would allow you to become an accredited investor by taking a test. And
Really?
rather than just having enough money. And it's something that a whole bunch of us in the venture capital industry have lobbied for years, because why should somebody who knows what they're doing, understands the risk, but just doesn't have, $1 million of net worth, why should they be prevented from investing in these private companies as long as they understand the risks? I mean, when they made that rule, they thought, okay, well, if people have enough money, then even if they lose it, so what? They can take it, right?
Absolutely.
But it really prevented, you want to talk about, the rich get richer. That's exactly how you do it, is you only allow wealthy people to make these investments, which when they work, they're life-changing kinds of money. And, if only the people that have money can make those investments, you're just perpetuating that situation.
Absolutely.
So the idea of somebody who can take a test. Now, it passed through the House. There wasn't a lot of drama about it. It was pretty bipartisan thing, which I know is unusual these days.
Very.
But it seemed to go pretty well in the House. Hopefully the Senate will take it up, and hopefully the president will sign it. But that would make, maybe some of the work that we did in Nevada a few years ago, almost a moot point, at that point, because then anybody could take a test and invest on a national basis. And while I'm quite proud of the work that we did in Nevada to create the Nevada Certified Investor, and I know there was a number of other states that were watching us, they were saying, wow, okay, that was really interesting. Should we do that in Florida? Should we do that in Connecticut or Indiana or whatever? But if we can have a test and people can study for it and pass it, like a driving test or a test to become, I don't know, like a Series 65, Series 6, Series 7 kinds of broker dealers. Hey, if you can study for it, take a test, great. Then why shouldn't you be able to invest as long as you understand the risks? Because it is risky.
Absolutely, yes. But it gives opportunities where there was none before, right?
Right. Well, that's the idea, is not only do you have a chance of making a good return if you're doing it right and understand the risks, but you're funding a company that otherwise wouldn't exist. So that's a whole set of people in an industry that you're helping to create that wouldn't be there.
Yeah, absolutely.
If the capital wasn't there to support it. So I think it's one of those things that's you get into that good cycle, right, of funding more stuff. And hopefully we don't get too excited about funding things that ultimately aren't going to work.
Right.
It'll create economic activity for, like I said, you have to make sure that there's a market there, that it's big enough, that you're actually building something that people want, whether you're providing a consumer good or you're providing something that I like that's sold to other companies, or you're doing one of these deep science projects that's going to change the world, which take oceans of money that little VC firms like ours can't. We can't support those things beyond the initial investment.
Right.
So we tend to be reluctant to do those kinds of things. But man, if you allow people to invest, and they can a bunch of people can put a little bit of money and they can create an ocean of money for a new investment that a venture firm might not want to invest on their own. Wow, that's cool. I mean, I think we all hoped.
That's game changing for the average person.
It could be. I think everybody hoped that crowdfunding would fill that gap, right? That back in 2012, when we created the equity crowdfunding marketplace, that would create that hole, but it really didn't. It didn't work. I mean, it serves a piece of the market, but it really hasn't done what I think everybody hoped that it would do when that came out in 2012. We got to keep tweaking it.
Awareness and education, right?
Yep. And making sure that not only are the founders creating something that people want and that's in a big market, but the people who are investing in them know how to look critically at these opportunities and say, yep, that one looks good. Oh, you know what? That kind of looks good on the surface, but when you dig under it a little bit, the market isn't quite big enough.
Right.
Or this set of people that are trying to do it really aren't the right ones. They don't have the right level of expertise. They don't have the willingness to eat glass and sleep on a couch. And
I love that term.
Eat peanut butter for a couple of years. So,
Chef Boyardee.
There you go.
In the school days, right?
Yep.
Well, Jeff, this has been a powerful conversation. Thanks for everything you're doing to support founders and help build a strong startup ecosystem. Don't forget to subscribe, like, and share this episode with anyone passionate about innovation, leadership, and the future intelligent automation. I'm Ed Moran, and as always, stay visionary.